This is a little special that I'm doing right now where what I did was I went through our focus list of stocks. These are the stocks that are the most widely traded, that have good option trading in them, and what we call as good cyclicality. That means that it's fairly readable cycles. Those are the rhythms in the market, and that helps us understand where there will be peaks and troughs and market conditions, and all of that is just so important to be approaching the market in a way that gives you favorable risk rewards. So with a market rebound due, in our opinion, even though the market is down heavily on Friday for now, that rebound is at hand, these stocks offer high odds of rebounds versus more downside, and that's a key. That while there may be a lot of stocks that rebound, of course, if the market does, these I think offer a little better risk rewards. I'm going to show you 7 of them that actually for the longer term are in pretty negative shape but have room to rebound and good patterns, and then 2 of them that have actually very good bullish patterns at the end that I think are high probabilities, and maybe even at this point you could say investable on one of them I especially like. So let's take a look here as we switch over to the charts on the first one of these stocks. This is Caterpillar, and I'll do a little brief tutorial on cycle analysis here for those people that are watching this for the first time. Our analysis is based on market energetics. There's a natural flow in the markets, and that, of course, is money flow. It's when money is moving into the market, or the particular symbol, it of course is moving up. When it's correcting or moving down, well, that's because money is moving out. And the shape of the cyclical patterns is just very important. What you have on here is the Caterpillar, which is blue, and the XLI, the industrials, which is green. So now what we're looking at in here are these cycle brackets on the bottom, and those are just a drawing tool. They give us a sense for the energies in the market. You can see when you have a cycle that resolves itself, where it moves up for most of the period, this is called a right-hand translation, and hit the target zone, and then pulls back, and it pulled back actually right to that moving average, then it's in a configuration to go to a higher high in the next rising phase. So in this case, you could see also it rallied for a long period of time and then corrected right here. When you get into these corrective periods is when you have the biggest risk of money outflows. That's when you get the biggest declines. You can see that right in here is that lined up, right in here is that lined up, and right in here. When you get into the periods after the capitulation and into the rising phases, that's essentially what you have right now, where the markets then rebound and rally. And you can see that nice rebound in here as it moved up from 178 up to 237. So it's about a 50-point rally in there. And these, of course, were much longer rallies during the bull market. We also have the reversal scout in here, which is a momentum indicator. In this stock, it's very choppy and wiggly and not a huge amount of value, though it will need to turn up in here and turn positive to get the rally like you saw happen right over here. In this case, it was positive the whole way and kept you in. So what does that mean right now for Caterpillar? Well, what it says is that you're in a rising phase. These 2 blue bars right in here, these vertical lines, are essentially the timing range for the bottom that we were looking for. What this projects to is up to, well, we look for about a 50% retracement of this downward move, and that takes you right over here to around the $200 level. So that would be about a 20% upside, a 20-point upside move potential in here into what we're looking for is kind of the peaking time somewhere out here in the beginning of the year for these stocks and for the market, and then get another period of severe risk going out there. So I'm showing you Caterpillar as the first stock and give you that little tutorial. Now let's look at the rest of these stocks, and I'll go through them a lot faster so you can see where we are. Here is CRM, Salesforce. This is another stock that's been quite negative, but again, it is bottoming. It hit our target zone right over here and now is in this time frame for a bottom. It's trading now at 144. It's pretty likely to get up to this area of 165 to over 170. 170, maybe 175, again, in these next coming couple of months, where we think there's going to be a rebounding period in the stock market. So that's a look at CRM. Let's take a look now at two airlines, LUV, Southwest Airlines, another stock that has been quite weak and in this downward trend. Now, what makes a downward trend? Well, it's where a cycle comes down, it fails at resistance, and then comes down again to this cycle low timing period at a lower low. Negative configuration, negative configuration. When that happens, then these resistance areas are sell zones. But in the meantime, trading now at 32.60, it could make its way up to 37 to 40 in here in this time frame. That would not be an unusual move. When you look at this low over here from around 37 to 50, that was a $13 move. In this case, we're looking for approximately a $7 to $10 move on the upside in Southwest during this period of just the next couple of months. United Airlines, of course, same group and a similar pattern, though it's actually not as steep of a decline in here. Right now, trading at about 35.80, and we're looking for a potential move in here up to about $42 in that area. So that's again a stock, United Airlines, that's looking like it is bottoming right now in this time frame with the stock market, and likely to get up into the 40s from where it is right now. So that's United Airlines. Two other stocks that we're going to look at now in one group, and that's in the metals group, and that's Newmont as a gold stock and PAAS as a silver stock. Right now, the gold market, silver market weakening again because the dollar is so strong. And at the same time, we believe that all of these metals are in periods where they have bottomed or bottoming and will begin to move up. So let's take a look at Newmont right here. Look at that decline from 86 right there all the way down here below 40. So what was that, like a 45, 47% drop in that time frame? It would not be unusual to get a rally of some significance in the next rising phase. So you can see in here as this rising phase came and then it came down, and this was about a sideways cycle, as you can see in there. And then as gold started to tick up again, we had this big upside rally. But then as the bear market really hits and gold became under pressure, as everything did in this liquidation phase, it started to move down. This is the timing window right in here for the bottom. And we think the stock reasonably over the next couple of months could get up over this $50 area, maybe 51. That would be about a 25% advance during that period. People are looking at me and saying, Slim, I thought you're a bear. I mean, what are you looking at these stocks that are bullish? Well, we're looking for rebounds right now in the market that should begin and maybe take us through the beginning of next year before the really bad period sets in. So we're talking about for traders or position traders that may be looking for opportunities. Again, we're not talking a whole lot about investing in here, though I have one stock at the end that I think maybe that might be the case. Here you could say PAAS, the same type of a pattern going on in here as we're in this bottoming period. Silver really tried to bottom in here and now is pulling back with the other metals very significantly. But I think you're going to see silver $20, $21 in this next couple of months. And the silver stocks are likely to do well during that period, trading here on PAAS, Pan American Silver, at 15.30, and it has a shot to get up near that $20 area. So that's a very significant rise, and that's not unusual as you look at the last rising phase, which basically took it up over here from 21 up here to about 30. So it wouldn't be that unusual to get a 40, 50% gain. Because of leverage situation, the metal stocks give you much bigger gains and losses than the metals actually do. So that's PAAS, Pan American Silver. And now we'll look at the last one in this category of kind of negative stocks that are ready for a bounce, and that is Orcl, ORCL. Again, the timing is right. This has a little shorter cycle patterns than the other stocks that I have shown you in here, and it's now trading at 64 or 45, and we're projecting it to get up near this area of around 70, maybe even to 72 in this next couple of month period in here, assuming that we are going to get into a period of stability where the market does begin to give you a rebound. And I think that's really a high probability. Now, the next two stocks are stocks that are configured positively. In other words, even though the market has gotten crushed, these stocks have not made lower lows. First one is Costco right in here. I'll just remove that. And what we have here is what we call a positively configured cycle in a right-hand translation. You actually had that right in here where it rallied through most of the time and then fell very hard, and that was a negatively configured cycle. But when this rally came and hit resistance and pulled back, well, now this declining phase is running out of time and it's getting ready to have another upside move. It's come down near the 78.6%, so the probabilities are not good that it'll get through the resistance when that happens, but still we're looking for a reasonable upside move here in Costco, and that would take you from this present level 457 probably up to over 500, maybe as high as 520 in these next number of weeks. Again, this is a positively configured cycle. It is translated on the right side, which means that the peak came on the right side of the ideal cycle. Normally when that happens and it makes a bottom, it has a very good rebound after that. So Costco is in a more bullish shape than the previous 7 that I showed. And this last one I'm going to show you is Uber, UBER. This company is actually, in my opinion, and things I've read and what analysts are saying, is that their model is really improving and improving in a way that they have a broader product mix and likely to do much better. Now you can see it was really in a very significant downtrend in here as you had this kind of downward channel going on for a long period of time like that. I mean, it just continued to follow that pattern on the downside. You could see where these lows are lining up right over here. And then all of a sudden things changed. Now, this is what makes cycle analysis so fascinating because in here you could see what is forming is an inverted head and shoulders. And what happens is that cycle patterns form this. In our cycle analysis workshop, which you could learn about by going to our site and clicking on that tab, and you'll see tons of information. It tells you about how these patterns are formed, and that cycle patterns, cycle energies are actually what does that. So let me just get a little closer look right in here, and what you can see is that there's a left shoulder right in here, there's a head that formed here. So this was the bottom of that cycle, and the rally in the next one, it was deficient, failed at resistance, came down, made the head right in here. Now it's coming down and running out of time on the downside, making the left shoulder. Were this to be able to get a rally as anticipated, it would then very likely break out of that neckline, and then you'd have the head and shoulders completed. Now, it would probably have to get up here above 33 to be able to do that, so it has a lot of work to do to get there. But in the meantime, these positive patterns say this stock very likely will surpass this level. The probability of surpassing this high is better than 70% when you get this positively configured cycle, as you see right in here. And if it does that, it's going to be an inverted head and shoulders. And that makes this stock actually maybe the only one of the 9, maybe Costco, but maybe this one is really the best, that in my opinion is actually investable, that for the longer term can give you some better prices as they improve the model and analysts get on board with that. So right now it's just completing this cycle, and we're going to look for a move up here from 25 potentially to that target area of about 35 right there, and that's a pretty significant move. This is the one I like the best out of all 9, but I think that what you're looking at is a overall very, very good pattern on all of these stocks that we look at that I think are quite significant as far as their risk rewards being good. In other words, probabilities of bottoming are high. The probabilities of responding to an upward move in the stock market are high. The probability of resisting the downside moves are high. That all says that these have good risk rewards. And these are 9 stocks that I think you should really pay attention to. That's my special on this for the day.